All right, then. Welcome everyone to this bonus AMA for this week. If you're new to the Rocket Pool Twitter Spaces, you might not know who I am. My name is Mav. I'm Rocket Pool's marketing lead, and today we have a special guest, Simon, the CBDO at Spool. We're going to be running through a few questions regarding Spool's integration of rETH, Rocket Pool's liquid staking token. If you have any questions, feel free to drop them as a reply comment or otherwise in the trading channel of the Rocket Pool Discord. I'll try and keep an eye out for both areas and we can address questions, if any, towards the end. But maybe we can kick things off with a bit of a personal introduction from Simon.
Sure thing, very happy to do that. I'll keep it really short and sweet. I think people are more excited to hear about what we're doing together, about Spool, about Rocket Pool, than about me personally. Overall, I've been in the space full time since 2015. I've really been through most of the ups and downs. What really dragged me in was back then ETH, the idea. I was fully aware of Bitcoin before that, but for me, I didn't see, maybe I wasn't visionary enough to see an alternative to fiat currency really be successful and what to do with it. But with ETH, for me, it was absolutely insane that you could all of a sudden build an entire industry on a fully distributed, decentralized network, and you could build unstoppable applications. So that's what got me into crypto, and I really just never left. I don't know if it's some form of addiction or if it was just not the smartest thing, but I've been here the entire time, throughout the bear markets, throughout the bull markets. And yeah, I'm with Spool since the beginning of last year, since January. I was the first employee of the DAO, really, and in charge and taking care of all of the partnerships, commercial aspects, and yeah, making sure that we have the right people on our side, that people are aware of what we're doing and where we can add value.
That's great. Thanks for that. Seems a little bit familiar to my experience too, albeit a little bit newer to space than you. But yeah, I think you're right. People are probably more interested to hear about the integration and about Spool. Interesting time to be having this space. It is kind of caught up. There's a kind of a lot going on out there in the crypto world. Potentially some good news floating around. But yeah, let's go straight into a high-level introduction of Spool, if someone might not be familiar with the protocol, and maybe a little bit of the history, if you can, the kind of path that Spool took to get to where it is today.
Very happy to do that because, yeah, indeed, there was a lot of history and there's a lot of reasons why we are where we are at, today. So Spool really started out as a as a project built by people that found it quite necessary as a automated portfolio management tool, basically for DeFi activity. So you could have fully customizable vaults that you can just spin up whenever you need them, that include risk models and risk modeling, and also a large majority, a big multitude of the most popular yield farming opportunities. So that was built during the summer. We've been at it for about 3 years by now. And we launched in August of last year into kind of the tail ends of the bull run. Then we've all been there. I don't know what happened throughout the end of the year and the rest of 2022, really. It's been rocky, to say the least, in DeFi. Liquidity has dried up, lots of uncertainty, lots of FUD around. And what we at Spool have done is really focus and shift our strategy from offering a product tailor-made for a highly liquid bull run and listen to those bigger players that were still fully convinced of DeFi, fully convinced of crypto as a whole, that don't shift their strategic focus simply because of a couple of issues with centralized lenders or of just a shift in central bank policy. So we worked and listened to some of our biggest partners and tried to build really a product that has real product market fit, that is not just cool on the technical aspects, but also has proper commercial value, and since we're working with institutions, also fulfills their needs when it comes to internal compliance, but also external compliance. But at the same time, keeping it all completely open, keeping it completely permissionless. So that's really how we got to Spool version 2, which is launching in just a few weeks. We're literally right now in closed internal testing. We're already through a chain security audit and a bits audit, both without any issues. And we're really, really excited to go live with the real product within the next couple of weeks.
Sounds exciting. Compliance is certainly an interesting area. For a little while, people have been saying that institutions are coming, and I still believe that is an area that over time there will be more and more interest in the space. But we need to remember that financial institutions often operate quite differently to the average retail investor. There is a lot of compliance and red tape, so to speak, certain requirements that need to be met. I haven't worked in a financial institution, but I have kind of worked in the corporate world. It is very much a contrast to what us listening in might be more familiar with Web3. And yeah, sounds like exciting times for Spool, a lot going on. But obviously, whenever anyone is interacting with the protocol, whether that is Rocket Pool or Spool or anything else, something that should be at the front of people's minds is, of course, safety, security, doing your own research, your own due diligence. It's phrases that we kind of hear a lot, but it is very important. So, could you share a little bit about the audit history and any other steps that Spool has taken, which I'm sure you have to ensure that the protocol is safe and secure for users?
Yeah, very glad you made the introduction to this topic the way you did, because I think what we've seen over the past really almost decades in the industry is some of these waivers, some of these disclaimers of, do your own research, don't, there's not investment advice and so on and so forth. But it's like, I think for most retail investors, it's very much like accepting the new Apple terms and conditions. Like no one actually reads that, right? So, people believe in the power of branding, the power of, if we go back to last year, for example, I remember so many talks with users, that building on top of Celsius, right? That said, hey, it's so big, it's so professional, so many people in there, it can't fail, right? But if you actually dug into it, you found out that it's basically a black box. And I don't know if it was the truth or if it was just like a nice excuse, but even talking with employees of Celsius, even talking with some of the engineers, I did not get an understanding of how they actually use the funds, which now in retrospect, it's obvious, right? Because they didn't actually farm any money. It was after a certain point in time, it was just funny accounting, basically. So to get to what safety, security, and audits actually means, right? Because an audit is also not an audit. You've got players like a Certic, where lots of the auditing is automated. You've got players like a Trail of Bits or Chain Security that charge 300 grand for an audit, and you need to sign up a year before. So what Spool really offers here as a, let's say, gateway to different protocols, as a gateway to DeFi, and as a toolbox that lets institutions as well as any retail user create their own properly managed portfolios, is that we invest heavily into safety, security, and audits. We not only did we get some of the most expensive audits in the space, but we also keep them going on an ongoing basis. Like we don't end audits; it's not a one-time thing, right? You have to keep re-auditing every time you build a new adapter that needs to be audited, and our users benefit really from that, right? As fast as a middle layer, we can swallow those costs because we can, basically pass on the benefits, not just to ourselves, but to all of our users, institutions, and retail just the same. And that's one of the things I'm very proud of as a CBDO, Chief Commercial Officer of Spool, that by working with institutions, by really finding product market fit there and building the best possible product, we can give the same benefits of safety, security, and the auditing side to all of our users. So if I personally set up a vault where, for example, I always have a vault where I deposit funds for my next year's tax payments, because I'm self-employed, I get income, and I know roughly what I have to pay next year, but I don't want that to just sit around idly. So I want a very, very safe, vault basically that's very well diversified. And that's for me a Spool vault, a personal one, and with only primitives inside, and I just deposit my funds in there. So I have all of the security that comes from Spool being so heavily audited, all adapters being heavily audited by the best players in the game. And then also on the institutional side, not so much for me personally, but what we do at Spool is we work with the top capital markets law firms in Europe to make sure that our institutional partners, be it on the DeFi side or on the traditional financial side, they get as much clarity as is humanly possible right now when it comes to which licensing requirements they will face if they build savings and earnings products. And we built our entire infrastructure for Spool V2 in a way that we minimize the possibility of a user being non-compliant or facing issues with the regulator. One of the examples here is, for example, and that's often overlooked, I think, but we've seen, especially in the US, right, the SEC actually reach out, sending subpoenas, sending very, very unpleasant letters to individuals, to DAO contributors, and so on, where it's very important, even on the DeFi side, to understand what's solid, what's more on the safe side in the DeFi space. Where, for example, we offer the options with our vaults to take out pretty much all human discretion. So if you set up a vault, it automatically executes, it automatically rebalances, it automatically risk manages. That you, after you've created it, you can basically only deposit or withdraw. There's nothing you can change about the vault. It is what it is. And with that, at least in Europe, not legal advice, but you take out so much discretion that the argument that you would need a portfolio management license if other people deposit their funds is basically gone. There's very little to stand on if a regulator wanted to make that claim. So projects, protocols, users are able to create these vaults, even to monetize them and take fees, while at the same time really minimizing their risks of being on the unsafe side when it comes to the law, because we mustn't underestimate that of course, funds are either there or gone, depending on the technological safety and how prone maybe a protocol is to exploits. But on the other hand side, as a retail user, a big concern is also, am I going to get a letter from a regulator? Am I going to get a letter from a financial prosecutor, something like that? And we really took a very serious approach to both of those sides.
Yeah, that's good to hear. Certainly liquid staking is another part of the crypto world that has kind of been under the regulatory spotlight a little bit recently. So yeah, certainly we're well aware of what can be involved and kind of have a same approach to audits. It's not easy and it is not cheap to get good audits done, that's for sure. But at the end of the day, it's not really something that is optional in the space. We've already talked a little bit about the Spool smart vaults and what they can achieve. Is there anything specific to rETH that people might want to know, or maybe you could run through a specific example of how we could use rETH with a smart vault, or kind of any other elaboration that you might want to do on that?
Sure thing. Like, what's the difference between a normal vault and a smart vault? For us, it is the programmability basically of the vault and its functions. So with Spool V2, when you create a vault, you don't just select different strategies that will be part of the vault. You don't just like manually define allocations. No, all of this can be algorithmically determined basically, and you determine the algorithm used and the parameters that are used to calculate. So you can set a risk model. This risk model defines risk scores for each strategy, for each underlying, like for example, rETH. And if you have a vault with the smart vault with like rETH in there, with Lido staked ETH, maybe with Frax ETH and unsheath, and whatever, Sommelier Finance and so on, you can really create a diversified portfolio that automatically matches itself. So overall, the amazing thing I think is as we're witnessing really this, this birth of a not completely new industry because it's been there for a while, but with the changes to ETH that we've witnessed over the past couple of months, really the emergence of the LSD industry and the strong growth there, I think it's a very healthy ecosystem, and we all benefit from a certain degree of decentralization there as well. Like I'm personally not of the opinion that if 100% of staking is controlled by Lido, that we're in a good spot. I think we all benefit from having multiple providers, from having the best technology really winning out, and not maybe just the established interests of maybe the biggest players. So what smart worlds allow is setting up different kinds of ETH staking indices, basically, like an index fund with all the different LSD protocols and strategies you as a creator want to have in there. And then rebalancing happens based on your risk model that you selected or defined yourself. So if rETH is doing considerably better than competitors, if risk scores are lower, it will get more allocation, will get more exposure from the user side. So overall, this really allows the user to, without heavy effort and heavy investment on the time side, to always be in really the best risk return spectrum for a wide variety of staking products. And yeah, so they always have the best exposure at the lowest possible risk and the highest possible APY. So I think this massively, massively helps the market and competition overall, which again, I believe helps us all in the Ethereum ecosystem.
Yeah, I think that risk reward assessment is something that is not always easy to do, and there's certainly some logical fallacies that can kind of be traps that are easy to fall into. So sounds like that might be quite a useful tool to mitigate some of those concerns. Looking at Spool more broadly as a protocol, is there anything else that is worth mentioning in terms of what you do well or USPs? It could be something to do with just your approach to building, or maybe something more specific that you have in mind for the protocol. What's one or more of the really great selling points why someone might want to use Spool?
I think I can give you the let's say correct corporate answer, which is a very straightforward pitch of Spool being the most composable, really, sandbox and toolbox for you to create exactly those vaults that you as a creator need at very, very low cost and extremely efficient. So when you create a Spool vault, let's say there's 10 different strategies in there, rebalancing between those strategies to keep you at the best risk return ratio happens on a daily basis. But for the user, for the depositor, for the investor, this is completely gas free. So you have a properly managed and risk managed and diversified portfolio without paying a large amount of gas fees. So that makes in the maybe first place Ethereum DeFi affordable again for most people, because if you have to pay, $10 here, $20 there, $30 there, depending on the smart contract interaction, that adds up really fast if your DeFi portfolio is not in the millions. And Spool really allows you to be properly diversified, even if you only have $1,000 to put into DeFi. Now, the personal real USP, as we are entering into the V2 phase and launch, from my side and from the commercial side, really the partnership side, is that we've spent the past year really listening very precisely to the needs of institutions. These are crypto exchanges, these are asset managers, these are banks, both like MiFID II compliant, full banks, as hard as it gets when it comes to their compliance needs, but also smaller ones, also less regulated banks that are more agile, more fast, neobanks, neobrokers. And we've worked with them to really understand what they need to get into DeFi, not on a theoretical level, as in, let's do a proof of concept, let's figure out what we need, but on how do we get this product to market properly? That means commercial viability, technological viability, and compliance, regulatory viability. For me personally, that's, I think, one thing where we are ahead of the rest of the market, where we're working really hard, and we've really built the entire Spool V2 product around this feedback. We've had, I think, in the bull market, and speaking a bit from the heart here, we've had an attitude maybe of many other protocols of let's build some cool stuff and then people will use it. But the bear market has taught us, obviously, that you need to build and find product market fit. And the only way you can do that is by having a very, very strong communications and flow of information between the partnerships and BD team and the strategic thinkers, minds in the DAO, of course, and your devs. And those people actually need to get along. They actually need to talk frequently and they need to communicate well. And we've really figured that out, I feel like, over the past year. And we're at a point where information flows so fast from talking to a partner that, for example, a traditional crypto exchange, fully regulated crypto exchange, to let's say they need a certain feature for them to be able to use Spool and build a product on top, to getting that back into the devs and into the product development pipeline. This takes maybe half a day now, when it would take multiple days, if not a week or plus, to get that properly communicated a year ago. So that's, I would say, maybe from organizational point of view, something that's I'm really happy about at Spool. And the first answer I gave, obviously, is the big USP for end users, because it makes DeFi affordable again, even if you don't have hundreds of thousands or millions.
Yeah, and I guess at the end of the day, composability and keeping costs low and efficiency is pretty important, and it's not necessarily always the case. I just looking at the gas before, it's up to 50 or so, with I guess a little bit of excitement in the market, but the past few weeks, I think, past few months, we've been treated to some pretty reasonable gas prices, but I think we all know that things can get pretty expensive pretty quickly. So even if people are comfortable transacting on mainnet right now, that may not be the case in the future. So efficiency savings are always good. That is something that we're working on right now at Rocket Pool with the next protocol upgrade, is trying to get gas costs down, because right now launching mini pool validators, they do suck up quite a bit of gas, which is a pain. So perhaps on that topic, then, we know that one part of Ethereum's scaling plans is to leverage L2s. So, what is Spool's approach to L2s, if any, or are you just staying largely on mainnet for now?
So we are already on Arbitrum. So we made that move still last year. For us, really, as we are this really middle layer gateway infrastructure for all of DeFi, we need two things, right? We need both a solid amount of liquid strategies that see proper usage, where there's at least 5, 10, and 15 million going in and out, and being then TVR. So we need a healthy ecosystem, basically a healthy DeFi ecosystem on a chain for us to really be able to offer value to users. And that's of course the other side. Then we also need users that benefit from getting this single point of entry, from being able to set up their own strategies, their own portfolios, their own boards. So the answer is pretty straightforward, basically. As layer twos develop, as more and more healthy DeFi ecosystems really emerge, that's how we're moving to layer twos as well. That's why last year, because we looked at all the tools available, and in the end we decided for Arbitrum, because for us it seemed like the most innovation was going on there. Most people, most money, most experimental and innovative capital was flying around on Arbitrum at the time of us making the move. But right now we've been busy with Ruby 2 development. Of course, we haven't made another move during the after Arbitrum, because we were really focusing all our resources on getting V2 out. And as soon as V2 is running on mainnet, stable, all the testing is done, we're starting to move into quality of life improvements, additional strategies. Then we will start working on additional layer 2 integrations again. And we already have some pretty advanced talks with two of the biggest players, which is going to be very easy to find out, but I'm not going to talk about it now.
Sounds good. For Rocket Pool, it's a protocol DAO that manages the L2 strategy. And yeah, I certainly don't envy them in that task. The L2 space is not only growing pretty quickly, but there's a lot of changes and kind of shifts around in terms of which L2s people are using. But yeah, it is at the end of the day going to become more and more important. I mean, gas is back up at three figures again. Um, Liquid staking in general, obviously, that is also a pretty quickly. It's a rapidly growing part of the Ethereum world, and if there's anything that kind of increases blockchain activity and drives up those gas prices in the future, there's a decent chance that liquid staking will have a part to play in that. So, what is Spool's views on liquid staking in general? You made a couple of comments already previously regarding like where ETH is being staked, but even in kind of a more broader sense, where do you see the future of liquid staking, and where do you see kind of the path forward in terms of the growth there?
Yeah, we are, as I alluded to, I probably gave away too much already. We are incredibly bullish on liquid staking. For us, this is a new period really in the entire industry. We see the establishment of kind of a risk-free base rate based on top of a volatile asset. I think that can be incredibly interesting, right? That can be incredibly attractive. It's not as simple as saying it's just a base rate, a base APY rate or whatever, because it's not on a stable coin. It's not lending and borrowing. It is on top of a volatile asset. But this volatile asset has very interesting properties, and overall, ETH is an amazing product, right? If ETH was a corporation, it could be audited in real time, basically the entire time on an ongoing basis. You will see what people are paying to use it. You will see what fees go to actual people who validate the network. You could easily, at any point in time, you can find out really what the profit is for the validators, for the people running ETH. And that itself, I think, is one of the greatest human achievements in recent history. I'm in the industry for about 10 years now, and I'm still absolutely blown away when I think about how cool this is and like how unique this is, especially compared to other corporations providing infrastructure. If you compare ETH to like a telecom company, a telecom infrastructure provider, carrier, anything like that, ETH is just so much better and cooler and like works with so many fewer moving parts and fewer people involved. And it's absolutely stunning, honestly. It's a marvelous piece of work. And so being part of that and being rewarded for validating the network is very straightforward. Like for me, I have the vast majority of my net worth actually in my own nodes running and being rewarded for ETH, for validating the ETH network. And for me, it's the most reasonable, most straightforward investment possible. Maybe I'm heavily biased. Of course I am. Who's not? But when I talk to institutions, this is not that much different. It's very easy to, at least the crypto-friendly stakeholders, to get them excited about e-staking. And like one of the bigger downsides, of course, the e-staking is still queues, getting in and out, the infrastructure part. And liquid staking providers like you guys are making it so much easier to build really interesting also financial products, even securities on top of this, where like ETH is not a security, not financial advice, not regulatory advice, anything like that, but you can build securities on top of that, of course. And those can be very rich in alpha. They can be very unique. They can offer you, again, returns and exposure to an asset you otherwise wouldn't have access to. So incredibly bullish, both from a personal retail level, but also from all of my talks with institutions. It's kind of I think, where the next wave of money is going to flow into DeFi.
Yeah, I have to agree with you there, even on the bias, of course. But yeah, good to hear it from someone who's obviously very much involved with staking, but perhaps not one of the liquid staking protocols who are probably going to be very confident on the future of staked ETH. So speaking of the future, the crypto world does move pretty quickly from day to day. What is Spool's future plans? Obviously, we've talked about B2 a little bit, but you can go as far into the future or not as you like. For us at Rocket Pool, we tend to work from one upgrade to the next because as Ethereum grows and develops, we're kind of trying to hit a moving target, which isn't always that easy. What's your views on the future of Spool?
It's in the near future. There's of course the one of the biggest, maybe no, not one of that's the biggest release we've had so far. Where Spool V2 is gonna come out within weeks. We're not giving an exact date because of the nature of developments on ETH. Because once you've deployed, it's really hard to fix things, and you need to kind of redeploy. We've seen that with Curve BSD and so on, where giving fixed dates for release is generally not a good idea. But Spool V2 is coming out in the very near future. It's going to be huge. I mean, it's not a very solid metric of good product, but if I'm still up to date, it is the largest code base deployed on Ethereum. It's an amazing project. It's heavily audited. It's giving people, I think, the largest amount of freedom when it comes to building portfolios, building vaults in the entire ecosystem and the entire industry. After that, we have some very major partnerships that we're going to announce as soon as V2 is out. We've got fully MiFID II compliance banks that are, as I said earlier, doesn't get any more complicated than working with those guys that will use Spool to power their earnings products, to build fixed income products. We're working with some of the largest asset managers in the world on also building mutual funds, building fixed income products. And all of that will be powered by Spool V2. So even while the product isn't live yet, we're still able to already work on those products that they can go live as soon as possible after deployment. And then for us, it's going to be internally all about building more adapters, integrating more strategies, just improving the toolbox and making it as open and as accessible as humanly possible. So it's really the one place to go if you want to have diversified exposure to DeFi, to anything really yield-bearing in crypto. That's the goal.
That sounds pretty exciting and a pretty positive future. So people are obviously going to want to stay up to date and find out when V2 eventually launches and some of these other exciting partnerships that you mentioned. What is the best way to do that? I'm guessing Twitter is probably a first port of call, especially since we're holding this AMA on Twitter Spaces. But how else can people kind of get involved? You mentioned a DAO. Whereabouts do they hang out? Is that Discord or somewhere else?
Yeah, the best way to stay updated and also get access to, for example, the Spool V2 beta testing is if you join our Discord. So if you will find links on our Twitter account, go join the Discord. We're all there. Even like the team is still fully there. You will have access to basically anyone on the team. We're still frequenting our own Discord, so I think that's very important. Join us, check in. And if you would like to be a beta tester, sign up as well. Like, just have to be a spooler. That all makes sense once you actually enter the Discord. Just some verification, and then we're happy to have you also check out the new product before most people get to see it. Otherwise, of course, we also have a Telegram community group, but in general, best way to stay updated is Twitter and Discord, and the Discord is the most interactive place.
Perfect. All right. Well, I think we're getting towards the end of this AMA. Now's probably a good time if you had anything else to add, Simon, anything that we missed or people need to know. Otherwise we can start to wrap up.
I think we had a great talk. I think we got through most stuff. I'm personally super excited to work with you guys, to have you guys as part of our LSD offering. And as I mentioned, I just really believe that it's helpful and great for competition and great for the entire industry to get people access to a diversified offering really of LSDs. And so the best players, the best products can prevail. And we don't get these, in the worst case, ecosystem lock-ins kind of, or people just staying with one provider because of historic reasons. So I'm really happy to have you guys on board, and I'm really happy and excited about what we can build together in the future.
Yeah, likewise, it would be great to see what Rocket Pool and Spool can do together. in the future. Thanks for coming along, Simon, to this AMA. Thanks to everyone who has been listening in, and we'll catch you next week, probably for our community call Twitter space. Thanks, everyone.
Thank you, guys. Have a good time.